Welcome to Finance Friday here at Homes in Order. By now we've posted nearly a dozen videos and we've seen some beautiful homes, and we've seen some beautiful math too. We've illustrated how 1 equals 5 and 2 equals 1,000. And at this point I have at least 2 super fans of the channel. And the other day I was walking out and one of the super fans was glued to the channel watching it. And then he looked up at me and he said, "Dad, I don't understand any of this stuff." And so that's probably a pretty good indication of where we need to go with this channel. The world of finance is huge, and there's so many complex things. There's countless careers that you can have in finance. This channel isn't aimed to communicate just to those top-level finance people. This channel is aimed to communicate with people who live in homes, or people who would one day like to buy a home for themselves. And so while the world of finance is so hugely difficult, and the thing that we're talking about here is maybe the biggest and most important financial decision most people make in their lives, the goal is to simplify it, and to sort of simplify the entire world of finance down to 2 simple equations. And I've come up with 1 equals 5 and 2 equals 1,000, and we'll illustrate those throughout the segments. But let's start here with one of the basic concepts of what you need to understand for this channel. This is the 30-year mortgage. And so what is a mortgage? A mortgage is when you want to buy a house that here costs $250,000, but you don't have $250,000. So you go to the bank and the bank loans you $250,000, and here's the terms of the loan. And so the loan says that you'll pay back the bank $250,000 and an interest rate of 6.5% for our purposes here. And then you come up with a monthly payment. The monthly payment is $1,580 that you can pay. So you don't have $250,000 to buy a house with, but you can afford $1,580 to buy a house. And that's just awesome. That's the world of finance that we live in. And so that's what pretty much everybody does, is they figure out what they can afford each month, and then they buy a house that works with that. So here's the terms of this loan. For 30 years, you promise to repay the principal, which is the $250,000 that you borrowed, but you also promise to repay the bank interest on top of the principal. And so you'll be borrowing $250,000, which you have to pay back, but you are promising to repay interest on that. So here's how it works. In January of the first year, and every month therein, or in January, February, March, April, May, for every year, for 30 years, you promise to make monthly payments of $1,580. And so how that is added up is you take the principal payment in January of the first year, and you add the interest payment for the first year, and you get your monthly payment for your mortgage. So principal plus interest equals your monthly payment for your mortgage. And then every month for 30 years, you promise to repay that principal. And if along the way you sell your house, then you get a new loan. Or if along the way you want to refinance, you can get a refinance. And all those things are there. But the important thing is, for this loan, these are the terms of the loan. Principal plus interest equals your monthly payment. Now, one thing that you'll notice on here that is the point of this channel is you dig in is, look at what your principal payment is. Your principal payment on this loan is $200, and your interest payment is $1,400. That doesn't seem fair, does it? And so if you can understand this simple concept right here, you'll be well on your way to having a very good financial future. That's Homes in Order, and we'll talk next time.